Look, when you look at your new buy rating on a lot of these European, is this on valuation? Is it because they look cheap, or is there actually fundamentals to grow from here?
Several elements. Valuation is definitely part of it, particularly forward-looking valuations, because earnings prospects for European corporates have improved significantly. The growth momentum for Europe is better than it's been for many years. But as well, you mentioned political instability. Now, that may be a strange call to make. There is a lot of political instability right now in Europe, but in our view, this has peaked, and so we're much more confident about the future, particularly given current pricing levels, that there is room to grow.
Does that mean that the wave of populism will actually be stopped, and there's a way that what politicians can reconnect with their citizens and Europe?
Well, we're seeing good prospects of that. We can't be sure until the elections are over, but definitely we're looking confidently at these upcoming elections.
Good morning. I look at the valuation of Euro stocks versus the Standard & Poor's 500, and frankly, I was stunned. If we normalize, bring the chart up. This is U.S. stocks versus Europe stocks back to the beginning of the crisis. I was flabbergasted by this gap here. Is this about the Standard & Poor's 500 is too expensive, or is it about Europe too cheap?
Well, it's a bit of both. Definitely, the S&P 500 has started growing much earlier and much faster than European markets. So you could say it's a more advanced stage in the cycle in the US, and Europe is playing catch up now, and so it's a good time to invest in that market.
What is the catalyst to get, Isabelle? What's the catalyst to get Europe going?
Well, I think Europe is going. I don't think we've seen one catalyst, but definitely the ECB accommodating policy has been playing a very strong part, and it's finally paying off. Definitely the weaker euro has helped as well. A very important driver has been consumption, and that's been boosted by falling unemployment, higher earnings for households. What we're waiting to see now is, are we going to see higher capex? This is beginning to appear in some of the Eurozone countries. If this keeps going, this will definitely boost growth going forward. Yeah,
Francine, let me bring this up. This is on the Bloomberg, and I've just converted it to euros, which you can do easily on the Bloomberg. And the idea here of the S&P 500 up 28%. Year to date, 28% for the S&P 500, and the Euro Stoxx 50 up all of 13%. And you've got the others one down here that the DAX actually, as the roulette wheel, does well as well. But all in all, an underperformance in Europe. Francine?
Yeah, Tom, an underperformance, but you have to guess at, the underlying questions on why we're underperforming. Isabelle, is it because actually earnings will be difficult to grow because we don't have any real growth prospects? Sure, we're growing a touch, but how much of it is down to ECB policy? Unemployment is stuck stubbornly high in Europe. I mean, we forget it when we look at this data, apart from Germany.
Well, no, I mean, unemployment is falling very significantly all over Europe, and that's making a difference. Also, you have to remember, unemployment isn't calculated exactly in the same way in Europe, in the US, so adjusted for that, the gap isn't as spectacular as you may think. And we should definitely, that's why consumption has been a driver. Credit growth has been also very supportive. And for many years, we had fiscal policy being a headwind, and that's no longer the case. We even have, in a few cases now, fiscal policy blowing in the right direction.
Yeah, I mean, I have Italy unemployment at 12%, youth unemployment in Italy at 36%. It still seems pretty high.
It's still a problem, but it's falling.
Yeah, it's falling a touch. Let me bring you to some of, the periphery bond yields, right? Yep. So this is what the ECB's been doing. You can see them start creeping up a touch. So Portugal, Tom, is 4.2. You can see Italy at 2.3, Spain at 1.7. When do these start creeping up because we're concerned that the ECB won't be there for that much longer? This seems to be a move on political risk.
Yes, right now this seems to be primarily a move on political risk and concerns, particularly about a win of an anti-Euro candidate in France, which would have major implications, obviously. The risk of ECB pulling out, if you take them at their word, would be closer to the end of the year. And then it wouldn't be surprising to see periphery spreads creep back up, indeed.